All right, let's talk more on the markets with Scott Clemens of Brown Brothers Harriman. He is their chief investment strategist. Good to see you, Scott. I see since we've seen you last, there's a little bit of I don't know, beard. Are we going with a beard look right now? What's happening?
I figured this was an appropriate way to measure the passage of time because it's hard to remember what day of the week it is. So this helps a little bit. Well, it makes me more pensive when I do this as well. So
yeah, it actually does. All right, we like the look. But let's talk a little markets right now. How excited are you by this 3-day rally? I mean, we haven't had a back-to-back rally on Wall Street in about 6 weeks. I know 3 days does not a rally make, but is this a signal to you that perhaps the worst is behind us with the selling on Wall Street?
I think the worst may be behind us in terms of the shock, of the rapidity of the downturn in economic activity. Look at this morning's initial claims report, which the market sort of has breezed through, I think because everyone expected it would be a really big and a really bad number. But I'm reminded, though, of our experience during the global financial crisis. The market had a couple of 20 or 25% rallies in the course of the fall of '08. Before it finally bottomed out in March of 2009. So for our investors, we're certainly taking advantage of the big down days, but we're not calling a bottom. We're not back to the truck. There's certainly opportunities on a security by security basis, but I think there's probably more bad news and probably more bad market days to come.
Scott, yeah, I'll echo Alexis' comment. I'm not used to the beard, but good to see you safe and sound nonetheless. We had Michael Gapin of Barclays earlier on note that we might start to see job losses accelerate 300,000 to 500,000 in the months ahead. Do you think the market has fully discounted some shocking data in the coming months?
Brian, it's a good question. I think so. And I think all economic data for the next several months or even quarters is going to be kind of crazy make them up numbers. We've all seen the range of estimates for second quarter GDP, for example. I think the record I've seen is a drop of 40%. But honestly, at some point, what is the difference between a 30% and a 40% drop in GDP? What's the difference between 18% unemployment and 22? So yes, the answer is I think the market is rapidly coming to grips with how qualitatively bad it's going to get. And is turning more towards what the reboot will look like, pivoting towards what it takes to reopen the economy, who sounds the all clear, how long it takes, and whether or not fiscal and monetary policy will enable the economy to bridge the next 3, 4, 5 months in terms of the labor market, in terms of household income, in terms of employment, et cetera, et cetera. So the bad numbers, I think, are largely baked in because we all know they're going to be really bad.
Scott, Dan Roberts here. Speaking of reopening the economy and kind of getting the all clear, how closely are you watching retail? Because I agree that even when we get the so-called all clear, whether it's May, whether it's July or August, and people can return to work and businesses open and retail chains reopen, obviously companies are going to be feeling the impact of this time for many months after, if not longer than that. And now you're starting to hear whispers of, well, this will hit the holiday shopping season come December, because obviously look at the jobless claims and, so much was made last holiday season of the importance of the U.S. consumer kind of keeping the economy going. So how important will that industry be moving forward once we're kind of out of the woods in terms of the everyone stay at home social distancing time?
Dan, I think you're right. The insight is accurate that the ripple effects of this will reverberate long beyond when things begin to get back to normal. There's sort of no question in my mind that in the same way several generations ago, people were forever informed by coming of age during the Great Depression. People coming of age or even household savings and deciding how to spend money will be informed by this for many, many years to come. And we may very well get into a holiday season in which people are a little more restrained in an effort to rebuild household finances or household saving. There's another argument to be made, though, and I'm sort of wrestling with this in my own mind, as you can tell, that once we're all released from home imprisonment, again, whenever that takes place, the relief at that may lead to a real burst in spending, going out to dinner because people are tired of cooking at home for 30 nights in a row or whatever it may be. So we could very well see a big bump in spending when the all clear is sound, followed by something that trends back towards a more moderate and a more restrained level.
Hey, Scott, it's Heidi Chung here. So we have stocks looking to attempt a 3-day winning streak. But what caught my attention yesterday was the VIX. Even as the market was rallying, the VIX jumped as well. And the VIX has closed above 60 for 9 consecutive sessions. Today, we are seeing the VIX lower, but it's still hovering at 60. So does that give you any pause at all? Are you concerned about that?
It does. And I think what that's reminding us is that volatility is a two-way street. And we all like upside volatility, don't get me wrong. But volatility is a two-way street. And I think that's the signal that the VIX is still sending. We've told our clients that in many ways financial markets are broken, and they're functioning obviously and impressively for that matter. But as a price discovery mechanism, both equity markets and fixed income markets are divorcing prices from reality, which is fair because reality seems to be divorced from reality. And I think that's what you're seeing in the VIX is that in spite of the upside volatility for the past 3 trading sessions, knock on wood, volatility is still endemic to the markets, and that's likely to continue.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.